Uzi, how are you?
I'm doing well. Slow work day, so excited to chat it up in Tesla Live. Saw Elon just posted about, I think, the deal in Australia, the 15 megawatt hours. It's pretty impressive.
15
Gigawatt hours.
gigawatt hours. That's right. Okay. I was going to say, I don't get out of bed for less than 1 gigawatt hour. But that's 15 gigawatt hours over like through 2030, right?
I'm looking at it right now. It doesn't say exactly on the post, but I've been seeing so many developments in there's Texas, Australia. I mean, the construction team at Tesla is extremely impressive.
Yeah. Let's dig into it later. Alexander, how are you?
Hello, I'm good. I'm actually road tripping through Norway right now. Really nice.
Road tripping. Are you in a Tesla?
Yeah, it's the best car to drive in Norway.
Best car to drive in Norway. Wait, you're not from Norway though, are you?
No, I'm from Sweden.
Okay. So are you kind of doing a tour of Europe? Because you're in a different country every time we speak, I think.
I have relatives in Denmark, then I'm just road tripping through Norway because it's so beautiful. And it's really great to drive a Tesla here. There's so many chargers.
Nice. Great. Ellie, how are you?
Hey, doing good. How are you guys?
Doing well. Everything's fine. Happy to be in Tesla Live. Sierra, how you doing?
Hey, y'all. Doing well. Happy Thursday.
Hey, did you see my how was your run this morning, by the way?
Good. I got out there before it got too hot. It's getting hot so early these days.
Yeah, it's humid too. Good 3 miles. That's a really good run. Did you see my post at the top? Number 5.
Checking it out right now.
Yeah, so I listed the top ways to support the space. 1, obviously join Patreon. 2nd, which is free to subscribe on YouTube. 3rd, which is also free to follow, like, repost, reply on X. 4, which is also free to encourage your followers to do the same. But 5 is new. Number 5, I'm going to try to get this rolling, is to, if a business or somebody who owns a business subscribes on X, I'm going to try 30-second audio ads during spaces, which is like this episode is sponsored by type of stuff. And we have somebody in the audience who sent me a laptop which hosts this space. And I'm going to try to start it with his business if he can. He needs to check with his partners first. And then, try it out that way. Maybe do like 2 30-second ad spots in one episode. And I think that would go, if I can fill those spots, that would go a long way toward getting this space into, financial sustainability at a minimum, like a gross margin break-even kind of thing. Like we're so far away from this space is so far away from being financially sustainable right now. We need a 10x improvement, and the first step is to get the gross margin break-even, and I think that would go a long way to do that. What do you think about this, Sierra, as a fellow host?
It's a great idea. Sponsors for spaces until hopefully, I'm hoping one day they'll put some sort of formal advertising system in place for audio spaces because they do drive so much traffic. But sponsors are amazing because you can custom tailor them to your audience. So if your sponsors are relevant to the topics that you're talking about, then you have a very captive audience, and it's a win-win for all involved.
Exactly. Yeah, the more, if the business is already selling to Tesla fans and owners, obviously that would be the best. But that's not a limiting factor right now because we just need to fill up the spots in the first place. And I felt the subscription amount, since I can't adjust it down, since they won't let me adjust it down, I figured maybe this is a way to test out audio ads because it is good value. If I can do one, I mean, anyway, I don't want to make this space about this. Alex, how are you?
I'm good, thanks. You?
Good. We have
It's
about,
Thursday. It's almost like Friday. Feels like a Friday.
yeah, it does feel like a Friday. It's weird. Maybe because we had a short week last week. About Tesla, how are you?
How are you doing?
Good. What's the latest on the rollout?
Well, we have the new version on the UI track, so it went out yesterday, and it's that's the one that they've been promising for a while. 2024.26.1, and it finally they've been testing it for a while internally, so quite a few reports about that have been posted in the past, but now it actually went out to first customers. I have not too many yet, but it's a good sign. So they started the rollout. This is the one that comes with a lot of new features. There is a whole list posted. Basically, there is I don't know if you want me to go into that detail, but this has nothing to do with FSD.
Yeah. Let's focus on FSD. So this is obviously a huge update that's rolling out. I love that. I mean, I saw the screenshot from Sawyer. It looks very clean. Tesla is now removing virtual buttons even, which is great. It's becoming more and more minimalist, getting ready for robotaxis. That's awesome. But on FSD, so 12.5 is with Chuck Cook. Do you believe we're going to get another 12.4.4 update to go wide, or do you think 10% of the North America fleet is as wide as 12.4.3 is going to go out, and then we're going to switch to 12.5? What do you think?
I will not be surprised if they do push out another 12.4, just because it's more polished, it's more ready. 12.5 will probably be a very slow and gradual rollout, just because it's such a major change internally. But I don't know the reason why they stopped the rollout of the 12.4.3. Is it just because they're getting ready with a new update, or is it just something, or they just decided to press ahead with 12.5? So we don't have the information about what the plan is. And from the tweets I've seen so far, I don't think there is a decision to go straight with 12.5. I know it's coming, but we may see another version before that. So we'll see.
Okay, got it. Do you have any information on an increase in miles per intervention with 12.4.3 or .4, the latest one?
No, I don't have any information. I can say what my experience with that version is, but that's anecdotal, of course.
Well, tell us a little bit about your personal experience. That's fine. I mean, you have a very, I would place you in a very unbiased, as unbiased as it gets. Very reasonable. So, what do you think about this latest release?
Well, first of all, if we go about if we talk about critical interventions, I don't remember having too many critical interventions this year at all. So that's been pretty good. So it's hard to say. However, I did have at least one critical intervention lately in the past few days with that 12.4.3, where it tried to go into wrong lane, like the opposite lane, and that wasn't a good idea. So basically, the situation was I was turning left at the intersection, and the traffic was jammed, so there was nowhere to go. So the correct decision would be not to go to the intersection at all, just wait. But what it decided, it decided to go to the opposite lane, and that was wrong. Maybe it was hoping to jump right in after that, so I don't know, but I had to intervene right away. So that's the only critical intervention I had. Everything else was in this version was pretty smooth, and it's I did see a significant improvement over the previous version. 3.6, it's much more, committing to certain things. Like I didn't have much hesitation. The biggest concern I have, and the biggest reason for any non-critical intervention would be sometimes it's just too slow. It goes below the speed limit for whatever reason. I have to give it an accelerator push from time to time, and then it will speed up and get to the normal speed. But sometimes it just doesn't want to go fast enough. I have at least one reproducible case when it's consistently doing the same thing. So like when the speed limit changes from 25 to 35, but it doesn't change its speed. It just continues going. It shows that the new speed limit on the screen, so it does recognize the change. But for whatever reason, it decides not to increase the speed, and it just goes very too slow. Usually, just a quick, short accelerator tap takes care of that. So it's not a big deal, but it's pretty annoying. That's probably, I think that's a regression compared to the previous version. But other than that, pretty much everything else, the way it handles the decisions, navigation decisions, I think it's a big improvement. I'm not seeing too many problems other than those couple of cases that I mentioned. It's perfect on all roundabouts. The previous one was pretty good too, so it's not major change. But certain things are improvement. Like for example, the previous this version is much better in slowing down for railroad crossings, at least in my area. That's a big improvement. So like in the past, I would slow down, but not sufficiently, so I would have to press the brake myself to slow down. This new version just does it most of the time, does it perfectly, like the way I would do it. So that's an improvement. There are some other things that I noticed as an improvement, like for example, it doesn't it won't speed. For example, I had a problem in the past when in the 25-mile zone it would go above at 30 or even 35 sometimes, and that's no good here. I mean, it's you can get a ticket for that. It's not doing that anymore, so it's again it's slowing, but in this case it's positive. It's how I would want it to go. I don't want it to go 10 miles above in the 25-mile zone. So that's definitely an improvement. So on my personal experience, the disengagements I think went down. I don't have too many disengagements lately. Most of the time I have no disengagement rates. But interventions like pressing the accelerator, for example, sometimes that's maybe even went up compared to the previous. So it's in that regard, it's a mixed bag. There are some improvements and major improvements in one area, and then there are some regressions in the other.
Got it. Thank you. And we have Sierra on the board, and Sierra just posted yesterday, I believe, a repeatable disengagement. Sierra, would you like to tell us about that?
Sure. There's this one area where I'll put the video down in the purple pill. It's kind of an understandable mistake because I think there's a maps error. But this one intersection that I go across, if I go straight across the intersection, it puts me in a parking lot, whereas the actual road goes around to the left, and FSD always wants to take me into the parking lot. I'll throw the video in the purple pill if anyone wants to check it out, but I'm hoping it gets corrected soon because I leave them a little note every time.
Thank you, Sierra. Dallas, do you have FSD?
Yes, I do. I'm a subscriber monthly, and I'm on a version 12.4.3. Not sure how, but somehow I got it.
Yeah. What's your experience like? Do you think it's moving the right direction? Do you think miles per intervention is increasing at a nice speed? But let's start with your prediction of when Tesla will launch robotaxis, and then we'll dig into those questions after that.
I mean, there's a hardware aspect to that, but then also equally, if not more important, software. I'm an optimist. I'm going to go ahead and start out with that. But with the rate of improvement I've seen, especially after the 12 or the version 12 release going into end, I think as soon as mid to late next year, we could put your great grandmother in a robo taxi and send her back to Austin from Dallas. I mean, I know that sounds far fetched, but I'm of the belief that we're a year away from that pending regulatory approval. It's this version alone was really, really impressive to me. I mean, it's passing the wife test now in my mind. My wife will actually get in the car with FSD and kind of enjoy it, whereas before she was commenting on how reckless it felt. But I mean, truly, this version is amazing. It just feels the most human. It's very smooth. The only thing I've actually had any issues with is stop signs are still kind of where, like, if you have a passenger, they'll look at you and go, okay, can it go? Like, what is it? It's going really, really slow here. What's going on? Because it'll stop and then like urge forward and then stop again and then kind of creep through. That seems like an easy solution. But aside from that, and then intersections coming in, it starts to brake really early. And then it almost doesn't go far enough to the line. Like you'll kind of be the guy at the line where you're like 6 feet away from the white line. So little things like that. But I mean, I use it every single day for commuting, and it's truly fantastic.
You use it every single day. That's interesting. Okay. So
I'm actually using it right now. Yeah.
Okay, great. So you said your optimism. Did you reply to the tweet at the top? Rate your bias 0 to 10. Where would you rate yourself there?
I did, yeah. If I'm not mistaken, I put a 6. Because there are topics that we'll touch on, or we'll mention timelines where I'm, as an investor versus a fan, I try to weigh my realism wand, if you will, and I get as frustrated as everyone else with the 2 weeks, like timeline stuff. I'm more optimistic on than I think a lot of people are, and I think Tesla's notorious for showing really cool tech and then releasing it 3 or 4 years later down the road.
Okay, got it. So you rate yourself 6 to 10, and you use it every single day, daily active user. And
Absolutely.
Also you said, okay, and then you said you believe that Tesla robotaxis will launch mid to late next year. So let's say by the end of next year. Okay.
Yeah, correct.
Okay, thank you. Jimmy?
Yeah, so I'm on 12.3.6. I've had 2 critical engagements today. It can't do anything with construction zones. I believe they'll show the robo-taxi, then it will be 1 year till launch, but it will be in one city and it will be restricted to a certain area. And then it will take 2 years after that to adopt it nationwide, depending on restrictions. After I can be emotional after today's interventions that I had, if I don't have a steering wheel, I am dead. I am a dead person.
Yeah. Yeah, I think, I mean, I don't want to kind of color others' opinion on this, but by the end of next year would be amazing. There's a lot of, it's still not feature complete. Like it was supposed to be feature complete in 2020, but for example, it can't reverse. Emergency vehicle, handling emergency vehicles needs there's more room to go there. Sierra is having a repeatable disengagement still, although About Tesla said it's been a while since he had a critical disengagement. Jimmy, and then Dallas.
Yeah, so I just wanted to add here too, I don't think it's just FSD problem. I honestly think it's a mapping and navigation issue because one of my disengagements today was I was in a construction zone and the turn didn't exist. The off ramp didn't exist. And so what my car does is it pumps the brakes like I need to figure a way to get over. And what it does is it causes the car behind me to think I'm like phantom braking. But I don't think that's an FSD problem. I think it's the navigation data that is getting fed into the actual car. And I think they need to rework that or take a second look at it and say, maybe the data that we're feeding, especially in like areas where roads are under construction, we need to like look at that and then let the FSD kind of have more say over than the navigation data that we're feeding it.
Dallas.
After what was just mentioned, it raises a good point. I do want to revise my answer that end of next year, I agree that a city like Austin, Texas would be a great beta place to start. I agree. I think a whole just open nationwide rollout is a little too bullish. I agree that there's going to be some major cities that they'll test it in.
Dave, and then I'm gonna ask Alex's opinion on this. Dave?
Just to add to that, I agree.
Dave, you're really far away.
Can you hear me now?
You're too far away, man. We're gonna go to Alex real quick. Alex, what do you think about what Dallas said? Dallas thinks maybe in one city by the end of next year, but nationwide will take a couple years after that, per Jimmy.
Well, I think we touched on that yesterday, didn't we? Like the first robotaxi, 2026.
It was more I posted at the top the tweet where people replied to, and there seems to be convergence around end of 2025, which is what Dallas said. Do you agree with that? But the range is wide, but most people seem to expect 2025.
Like late 2025. We're talking like last quarter, like Q4, maybe.
Yeah, say end of
I see it
2025.
more like maybe first half of 2026. I think we tend to often like be overly optimistic on stuff. I don't know if we get it from Elon or it's just because we're not involved in these projects. We don't see like how much work goes into them. We just see the end results. So maybe it's a combination of Elon's timeline optimism with a little bit of ignorance mixed in from our side that makes us overly I tend to like whatever I'm hoping for, like maybe add 6 months or something. I feel I'm less disappointed in when that I do that. But
okay, so Alex is at first half of 2026, and at the top of her screen is a tweet right after yesterday's space. There are about 200 replies to it, and you can go through and see who said what. It is interesting though that the range is so wide. The range of expectations is still so wide. 10 years after Tesla started, and we've been talking about this topic, pretty much daily, with hundreds of people, thousands of people giving their estimates, dozens of companies trying it, and still, I feel like we're not anywhere close to understanding when it's actually going to happen. But our understanding of the problem is increased. But it's always like 1 year out. Ellie.
Thank you. Alex, I have a question for you, if it's okay. What do you prefer? What do you rather seeing? Robotaxi out somewhere in the US for like, let's say 2025, beginning, middle, whatever, or FSD outside of the US in Europe or China? It doesn't have to be neither, like either. I'm just curious to hear what you think.
I don't know. It's hard to say because like the robotaxi has like a hardware component to it. So it has to be built and it might be, I always think that maybe like Tesla is going to do a little bit like Waymo in the beginning, like select cities and deploy a bit like that. So that might be a little bit easier than to have like FSD in Europe or in China full on. But China is like so open to these technologies. Even like the UK, like they're targeting 2026 for robotaxis over there. Like legislation, they're ready, everything, they're ready for it. So I don't know. It's hard to say. It's really hard to say. Like how things are going to move in which order.
Do you have a preference?
Preference. No, not really. I'm guessing like it's however they can make it work. Like the sooner the better for everything. I don't think there's like an order in which I'm like, oh, this would be so much better if it happened in this order versus another order. No, not really.
All right, Dave, would you like to try again?
Oh yeah. Can you hear me now?
Dave, you're still far away. I don't know
Can you
what's
hear me?
going on. No,
Can't hear me?
nope. All right, Magic requested to speak just a second ago. Let's see if he wants to come back up. We didn't have spot in the board, but
He was like 50 yards away. Now he's only 45 yards away from the
actually,
microphone.
it actually got worse, I think.
I
I
thought it
think,
was a little better, but like just by a tiny little bit.
all right, let's bring the bear. Bear on board, bear on board. Let's see. Magic. Go ahead. What's the thought of the day? Can you guys hear Magic?
Nope.
Hey, just jumped on. Firstly, just wanted to say, Jimmy, you're not allowed to say anything negative about FSD. That's illegal. Next time you're gonna go get stoned outside. So this is your first warning. Second one, we're gonna just stone you to death. So just please, you know the rules. We're gonna kick you out if you do that ever again. So please don't do that. And secondly, I think my question is,
Man,
I thought
next thing you know, you're going to be buying shares in Tesla.
I'm telling them to follow the rules, right? I know the rules of the cult, right? I know, you know, I don't follow them, but I do respect that. I don't like when people don't follow the rules. So, and yeah, I mean, I think someone was saying that it's going to be like a Waymo thing. I mean, are you guys going to throw in the towel on FSD? I mean, I thought those were going to be robo taxis and can drive you make $30,000 a year for you and have no maintenance issues and all that. So I'm very confused on how you guys are throwing that away.
No, I think this space has always been balanced. Maybe always is a strong word, but let's say in the last 12 to 18 months, the robotaxi expectations have gotten pushed out and I've been trying to get bulls and bears in the same space over the last 12 months or so. So since we did that, I think robotaxi timelines have gotten pushed out. I think everyone would agree with that. But if you look at the tweet at the top and go through the replies, you'll see most people are right now in 2025. So actually what I can do is, yeah, Magic, what do you think? When do you think Tesla will launch robotaxis? Did you reply to the tweet at the top?
I didn't, but I mean, there's been the track record of delivering things. I think this is not a controversial statement. I think there's a track record of delivering things much later than expected. You can call that optimism. I call it consumer fraud. I mean, we can somewhere in the middle probably, but the thing is, I think it's going to be a few years. I mean, I don't know, maybe 5 years. But between now and 5 years, the core auto business is deteriorating. So I don't know how you can fund that capital investment for 5 years while the auto business is deteriorating. Deliveries are down quarter or year over year for the last 2 quarters. So that's an objective fact.
Yeah. What do you think Q3 deliveries would be like?
It depends on if they do another fleet sale to China last minute. That can help. It depends how, if any other big fleet sale is going to happen. I mean, either way. Even if they do hit deliveries, the margins are going to go down. So because of the 0% financing and all those details. So I don't see it being positive. Either if deliveries are up, that means margins are down.
Well, so you didn't give me a specific answer on Q3 deliveries, right?
I believe it's going to be lower than the estimates currently priced in. Now, what Tesla does is right before, a day or two before, he calls everybody's investor, all the sell side analysts, and tells them to revise the deliveries lower magically, and then to set up a beat. Right. So that if you look at every quarter, either a day or two before the deliveries come out, he instructs I forgot who the IR person at Tesla is, but he instructs people, the sell side analysts, to downgrade their deliveries expectations, and they magically beat. So
well, that's a speculation. That's a speculation.
No, I can send evidence on the emails that are sent to sell side analysts. They do send out an email, and they give you expectations.
Really? Okay, well, maybe you can tag me on it, and I would be interested in seeing that. All right, what do you expect is what do you believe is the Tesla Automotive market cap value, fair value today, just for Tesla Automotive?
I mean, just the automotive business. I mean, Morgan Stanley has it at $56 a share, right? So that's Adam Jonas is saying that. So I don't understand why
Is that a bear case or base case?
I'm not quite sure. I think I believe it's the base case that the auto business is 56.
I doubt it. I doubt it's on $56.
Okay, well, so there's two things I'm going to follow up with you on. Okay, Adam Jonas's valuation of the car business and the sell side IR estimates. Okay.
Okay, but I asked yours, not Adam Jones's.
So yeah, mine is $50 to $60 a share just for the auto business. That's commiserate with the growth. That's in line with other automakers, their growth rate. I mean, if they didn't have growth, you'd value it at $30.
Okay, so you're saying 1/5 of today's market cap, so that would be about $150 billion, is due to Tesla Automotive. Okay, let's pause you there for a second. Let's see what maybe Alex thinks. Alex, what do you think Tesla Automotive fair value is today?
No idea.
No idea. So
no, I don't want to pull up charts and everything. I have like a whole Excel spreadsheet and everything, but like what's the issue here? Like we're saying like automotive is worthless now? Is that the thesis?
No, there's no thesis. We're just kind of polling folks to see basically a sum of the parts kind of analysis. So Magic has it at $150 billion. I think the consensus on Tesla Energy is also about $150 billion. It seems, the machine comes in, his estimate is $150 billion for Tesla Energy. Elon has actually in the past said Tesla Automotive is worth $0 if they can't figure out FSD. When they figure out FSD, it's worth a lot more.
Well, it's obviously not worth $0.
Well, that's what he said.
Well, figures of speeches and, scales of numbers that he's talking about, but it's obviously not worth $0. Right?
Edward,
come on.
Yeah, I mean, even Edward, even Magic thinks it's not worth $0. But Magic, are you including FSD in your $150 billion estimate?
I don't include things that aren't complete into my estimate. So no.
Okay, so you're more bullish than Elon on Tesla Automotive, sounds like.
Yeah, I mean they're selling cars. So I'm not gonna. That's something I can tangibly see, and people want the car.
All I'm saying is that you are more bullish about Tesla Automotive than the guy you say is frauding people.
I think he's walked back that statement, but I think he did make that statement. He's saying that it's pretty much the majority of the value is this because an auto business is a very low margin.
Magic, if Elon is the CEO of Tesla, what does that make you if you're more bullish? Are you like an Uber bull now?
I guess, yeah. I guess.
All right. Edward?
Yeah, I think what Elon was leading to about like not the car business being worthless is basically, they're making a lot of money on the FSD. That's all software, right? But the cars have the super low margin. So without the FSD, without the future of the cars going on the network, a lot of people probably bought the cars thinking maybe they could put them on the network or make money and stuff like that. So I think that's maybe what he was kind of leading to. There's not a lot of money in it is what I think the issue is.
Well, Jimmy disagreed with you a bunch and then he left. So maybe if he joins again. I can ask what he agreed with you. Edward, I'm not sure what he exactly meant because he did specifically say Tesla Automotive is worth 0 without FSD. And we have a good question from Tesla live chat that relates to this. Drew Soul, who is a big supporter of the space, asks, are we still delivering more vehicles this year versus last year? Magic, what do you think? Let's start with you.
So I think Q1 is down, Q2 is down. So it's going to be pretty hard to deliver more than last year. I mean, just based on the last 2 Q numbers. So I'm guessing down.
Okay, so Magic thinks down year-over-year deliveries. Elon said they're going to deliver more. I believe Omar believes that Tesla will deliver more this year than last year. Dallas, what do you think?
I don't know. I honestly don't know enough to be dangerous on that, but I would say more.
Okay, so Dallas is going with Omar and Elon. Alex, what do you think? I believe the last I heard, Troy hasn't updated us in a while, but I think he takes a couple of weeks off after every quarter end. But the last I heard, we heard from him, he expected down, but the deliveries surprised him to the upside. So maybe he'll update it. I'm not sure. Alex, what do you think Tesla's deliveries will be this year versus last year?
No idea. I don't track it like Troy, and I don't track Troy either.
Really?
I think I think we're headed like between 1.8 and 2, depending how the last 2 quarters go.
Okay. Drew says that question is for Magic. All right. So Magic said down. I'll take flat. I think it'll be flat year-over-year. I mean, Alex, as an investor, doesn't that worry you at all? That Tesla Automotive is flat year-over-year with declining margins?
No, because of the macro environment. Like, I don't know. Maybe it's because like I've been in your spaces like quite frequently, and other spaces too. It seems to be like a recurring theme. So I don't really pay much attention to it. But yeah, the macro is affecting everybody in the automotive industry, and Tesla is no different. So I'm not worried that this is a cyclical thing that will change. It has nothing to do like structurally with Tesla. Tesla is like doing great, but you can't like change the world. Tesla cannot change the macroeconomic environment of the whole world. So it is what it is, and we just wait for it to that we pop out of it. And in the meantime, while energy is popping, while automotive is depressed, so Tesla is in even a better position to basically hedge one side with the other. And then you have like FSD and robo taxis and Optimus down the pipeline, and the more of these different sectors that they're attacking, the less affected Tesla will be to these fluctuations in the market. So yeah, I'm not worried about that. And honestly, like I like seeing Tesla go up, and I'm a bit sad when I see it go down on a day or on a week or whatever. But it's meaningless. It's meaningless. I look long term. I look what they're doing, how they're executing, and as long as that's good, like and they're leading, I have no worries, honestly.
All right, Magic is going to rip that apart. But before that, I pinned at the top of our screens the question that we're debating, and I would like listeners to please reply with their take. Will Tesla deliver more cars in 2024 versus 2023? The question is at the top of our screens. Would appreciate a reply. Thank you. Magic.
Yeah, I mean, to Alex's point, I mean, I agree that it does have to do with macroeconomic issues. I'm not saying it's only autos, and this is a tough time for the consumer. But my follow up is, why would you hold a company that's so sensitive to it's pretty much, I wouldn't hold any consumer durables. I wouldn't hold any auto company right now, almost. So I'm not just picking on Tesla. I just think any consumer discretionary is a very risky spot in the market. So I just think everybody here should just say, hey, you're holding on to a consumer discretionary company trading at 100 times earnings. So just it's a very precarious situation.
Magic, just to update, you're still short via puts, correct?
Yeah, because the fundamentals have
Okay,
deteriorated.
that's fine. That's fine. I just wanted to kind of clear that. We're going to continue with the question at the top. Uzi, what's your answer to the question at the top?
Oh, well, I was going to add on to Alex's point that, I'm focusing on the long term, but in the short term, it's Cybertruck. And Cybertruck's already outselling Ford Lightning and Rivian R1. So, no one's been focusing on that today. But for your question, yeah, it's probably going to be 2024. I mean, the 0% rate definitely helped deliveries, but I don't know how that's going to affect margins. But rates get cut. I think it was 100% chance that it went down to like 92 after Trump made a comment about rates getting cut in September. I think you'll see a trend of rate cuts, and that's the real thing Wall Street's paying attention to. So 2024 will be a great year for auto sales.
Okay, great. I see Michael in the audience. If you would like to come up, we can maybe dig into margins this year a little bit more with Magic. Okay, Uzi, thank you. Ellie.
Yeah, thanks. I just wanted to say that as someone who sells Chinese brand, if I was all in Tesla, just for the car, I wouldn't put myself in this position anymore because I see what I see what the Chinese cars has to offer. So honestly, as a small investor, I really don't care about the sales. I'm all in just for the future and the possibilities, and just wanted to add that. Thank you.
Thank you. Magic, I'm looking at the replies that's coming into the tweet at the top, and it looks like the average expectation in this space is 0% to 2% up, 0 to 10%, 0 to 10% up. So a slight increase in deliveries expected. We have one of our experts on the board now on this topic. Michael, what do you think about deliveries? What's your answer to the question at the top?
I mean, it would take a very big Q3 and Q4 to get an increase in 2024 versus 2023. So at the moment, I have a hard time seeing it coming to pass.
Yeah. Looks like you agree with Magic. I agree as well. Something has to change, whether a big cut in rates or even a 25 basis point cut, I don't think will help at this point in terms of year-over-year deliveries.
Yeah, 25 basis points isn't really going to move the needle at all on the monthly payment. It's going to be very minimal change. So,
yeah, and I think FSD's impact on sales, vehicle sales, is still a year out. Like we need a 10x improvement, I think, in miles per intervention, and maybe a dramatic slowdown, dramatic drop in critical disengagements. I mean, they're kind of rare at this point, but still, people need to be really comfortable that they're not going to get a critical disengagement before FSD starts impacting vehicle sales. So I think that's a year or 2 years out. So it looks like Magic is not that bearish at all. Magic, what's going on? Looks like the market is pricing in all your bearish expectations.
The market is definitely not pricing it in. I mean, maybe Wall Street estimates are agreeing. I'm not sure, but I mean, it's if you look at just the auto bit, I mean, how the hell did it run up 50% on no news on declining deliveries, right? Like that's definitely
well. Here's the thing: Wall Street analysts are not here right now. They're not discussing this company daily as we do. And the fact is, retail shareholders hold the majority of the shares. So this is the market right here. As to the increase in share price in recent weeks, it's likely due to Tesla Energy, not because of Tesla Automotive or FSD.
It's not due to a gamma squeeze by short dated call options. That's not what happened.
I mean, the pace of the increase might be due to a gamma squeeze, but I think some increase in market cap is warranted based on the massive installations that we saw and all these positive news around Tesla Energy new contracts. And I suspect we're going to see a surprisingly high gross margin for Tesla Energy in the next few days here. What do you have to say to that?
I mean, it's an insane amount of market cap that was gained in a very short period of time. So I'm not buying it, but whatever. I mean, look, the thing is, sometimes people just look at something and they need a reason. I mean, this doesn't seem like there's a reason here. And if I was a long investor, I'd be like, hey, why is this stock moving like a meme stock, like Bill Gross says? And maybe there's something to look at and maybe to think about. How many other stocks have a daily call? Does Google have a daily call? Does Meta?
Well,
I don't think so.
Let me kind of we touch on Bill Gross real quick before we switch to margins. Bill Gross said that Tesla stock is acting like a meme stock. I think there's some truth to that, right? That's such a huge increase day after day after day in a row is a bit much. But at the same time, as Elon replied to a tweet about Bill Gross's comment, he's not that experienced with technology, new innovation stocks, correct? I mean, he's also a bond investor. So a bit more, relatively speaking, backward looking versus stock investors in the first place, but not, even to another extreme, kind of like a venture capital type of investment around Tesla Energy, Optimus, robotaxis, FSD. Like that's not his, that's not his expertise area, Magic. I think you would agree with that as well. Not to mention that, if you look at his recent performance, as opposed to when he founded PIMCO, there is a bit of a deterioration. I think you would agree with both of those statements, right?
I'm not too familiar with his recent performance. I know that he is, extremely well respected in the fixed income space. The thing that I would say though is that it is. I mean, if it's a very small cap company moving 50%, that's normal. You don't.
Well, let me just add one more thing on Bill Gross. So you said he's well respected. I would challenge that because, and I was in the industry when he first left PIMCO, when he got pushed out really, and he went to, I think he went to Janus. Is that not correct?
I think so. Is either him or
Yeah.
Eller? I'm not sure what the after PIMCO. I'm not really.
Yeah, and when he left and went to a new company, as you appreciate, I think, when portfolio managers leave, assets usually follow that portfolio manager. And in his case, that did not happen, which is very interesting. So, go ahead.
Yeah, I mean, we can argue here and there. I mean, he did build PIMCO, right? I mean, we can talk about track records. Maybe someone doesn't have a good few years. I mean, but he's still a very serious, well-respected investor. Maybe some people don't, but broadly, I think he's well-respected. But I think the main thing I was saying is that very small cap company, like the lower, it's very easy to turn $1 to $2. It's very hard to turn 500 billion into a trillion, right? Like it's the higher the number, the harder it is for it to double or to go up. So Tesla's already trading at very high numbers. So for it to gain, hundreds of billions of dollars in market cap within weeks, that's not normal. And especially not on some breakthrough news. Maybe beating deliveries on doing a little bit better than expected on batteries. I mean, like objectively, that's not what drove the stock 50% of such a large company.
We have a second bear on board. Everybody, brace. Grant.
Hey, what's up? I hopped on just because Bill Gross is absolutely a legendary investor. It's insane to claim that he's not well respected. He left PIMCO when he was like 70 years old. He has a book written about him called The Bond King, which I recommend. If you have a book written about you that describes you as the blank asset class king, I think it's safe to say you're a successful investor. That just bothered me, honestly.
Yeah, I agree with you. Past tense. Present tense is a stretch because, listen, money talks. Assets did not follow him from PIMCO to Janus. That's a fact. And if he was that great, they would have followed.
I will push back by saying that he did a good job of building the firm he founded such that it was able to succeed in his absence. I mean, that's actually like a great mark of someone that's a talented founder and leader, building an institution that continues without you.
Yeah, obviously that was decades ago, and PIMCO has come a long way since then. And how many people work at PIMCO today? Do you know?
I don't know, but he left a decade ago. I mean, it wasn't like that long ago that he was there building it. I mean, that book goes into a lot of the succession planning. I mean, what's his face? Mohammed Al Aryan was there for a period as a potential successor to Bill Gross. And then he left. He's at like, I don't recall now. I'm not like a fixed income expert, but the succession planning for what basically the most powerful seat in the fixed income world was intricate.
Okay. Well, do you agree with Elon that Bill Gross is not that experienced with, technology type of investments?
Yeah, I think you can say that. But I mean, he's yeah. I think I'm quibbling over semantics on some level, but I have a lot of respect for Bill Gross. He is a legend. It's just annoying to hear him, to hear you say like, "Oh, no one respects that guy." Blah 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 blah. Like saying that it's behaving
Well,
like
I
a
didn't
meme
say
stock
that.
is
I didn't say that.
obviously fair. Okay, well, you know what? Whatever it was that you said irritated me.
Well, I think it matters when you're going to accuse people. It matters what they actually said versus what you think they said.
What did you say?
I think in the present tense, he's not as well respected as he was in the past. And his track record speaks for itself. And the fact that SS didn't follow him from PIMCO to Janus, which is a much smaller company. I mean, you would have expected Janus's assets to increase very substantially. And any other portfolio manager who has a successful track record, that would have happened.
He's in his 70s. I mean, this isn't important. I'll leave it. I just think that he deserves respect.
Well, if you're saying he's in his 70s, then you kind of agree with me and Elon that he's not in the best position to judge Tesla's fundamental value today.
I mean, if you want to go to your grave insisting that the stock isn't behaving like a meme stock, that's fine. A lot of sophisticated market.
No, I said the opposite. I actually said the opposite. Again, you're not listening to what I actually said. I agree that in the recent weeks, Tesla did behave a bit like a meme stock, going after day after day after day, 10 days in a row. That is a bit of a meme-ish. Not to say, but on the other hand, there is a fundamental reason I think that's driving the stock higher, which is Tesla Energy surprising everybody.
Yeah, I mean, we can disagree on it. I mean, it was a good number for the energy side. It'll be interesting to see. I feel like there's disagreement in the community around how the margins for that line of business is going to develop. But
let's talk about that. Let's talk about that in a second.
Plus.
I'm going to go to Michael. Michael, what do you think will be the gross margin for Tesla Energy in Q2?
So I think I think in Q1 it was around 25%. I'll have to double check. I think it's probably going to be approaching 30%, given the large, and maybe even exceeding, given the large increase in deployments. B, they've ramped up their production in the Lathrop Mega Factory, as they call it. So the COGS have been in decline, and also lithium carbonate prices have been in decline. And then the other piece of the puzzle is that Tesla has these performance obligations where they have to meet certain performance obligations of the energy storage asset before they can recognize revenues. And so they've been putting away a good chunk, deferring a good chunk of the revenue, and there's no associated cost with those revenue recognitions. So actually, as they recognize those performance obligations over time, the posted gross margin should actually go up. So there's a lot of factors that will push the gross margin up over time for energy storage, at least for the next several quarters.
Okay. So Michael is obviously very knowledgeable about these things. He thinks very deeply about these things. And this is a topic that is often avoided, but it's very material. This specific question will be very material to Q2, Q3, Q4, Tesla's financial statements. Okay. And I would like everyone to think about it and submit a guess. At the top of your screens is a question. What was Tesla Energy gross margin in Q2? What was Tesla Energy gross margin in Q2? This is very material, and we're going to be able to check it next week. Okay, so please go up to the top of your screens and reply to the tweet at the top with whatever is in your mind. And don't be shy about it. If you get it wrong, nobody's going to block you or kick you out of the space. And throw out a guess. And I will think about it over time. That's the way to kind of, I think we're going to get, everybody's going to be wrong, and we're going to get closer to reality over time. Grant and then Magic.
Yeah, I am not an expert on the energy business or the gross margin profile, but I'm curious, Michael, what are the performance obligations that they can deliver with no cost? Like, what is it that they have to do to recognize that final bullet of revenue that doesn't cost them anything? I just don't know enough about how the contracts are structured.
Yeah, so my understanding, and I'm not certain on this, so I'm expressing some uncertainty, but my understanding is that it's basically like uh, deliverability. So there's a lot of things that you have to do to actually interconnect the battery and for it to actually work with all the equipment and dispatch properly and communicate properly. And so, and there's a lot of like pieces that have to work together. And so the performance obligations, as I understand them, are mostly just basically the battery being able to deliver the power. Um, it's like software, basically. That's my understanding. I wish I had like a contract that I could read into, but I haven't been able to find one.
Well, we have third bear on the board now. Third bear on board, Machine. What is your answer to the question at the top? What was Tesla Energy gross margin in Q2?
First of all, I'm taking offense to your basic description of me.
Dude, okay, listen. Oh my gosh,
Simplistic.
like you say this every single freaking time, but the reality is you are a bear, okay? And I'm going to prove it to you. I'm going to ask my followers, is Machine a bear or a bull? And I'm going to pin this at the top, and let's see what people say, okay?
Fair enough.
Vox Populi, Vox Dei.
Exactly. And now we're going to refer to you that way from now on.
Fine. You can call me. Never mind. So yeah, to your question, and what I want to come on and comment is to this idea that's going around with Larry, the South African. I offended him, calling him Australian. That basically all these excess revenues will have like no cost. It does seem kind of compelling, and if that's the case, then in Q2, probably about half of the delivered revenue is going to be this excess because they're not producing more batteries right now that we know of outside of the approximate 5 gigawatt hours a quarter. So for them to recognize 10, I think means a lot of it's going to be this excess revenue that wouldn't have a lot of costs associated with it. So if their gross margins before were already around 20%, I'm going to go with 50% this quarter.
All right, 50% gross margin for Tesla Energy this quarter?
Yes, and then it will go back down next quarter.
Okay, let's get Magic in here. Are you just trying to like prove to the listeners as they reply to the tweet at the top that you're a bull?
No, I mean, I seriously.
I urge my listeners not to fall for this trap. Please do not fall for this trap. Think back to all the times he said Elon is being too optimistic about FSD, that the stock, he doesn't even have his shares right now in the company, that he believes is overvalued. When you're replying to the tweet at the top, please consider all of those facts. Machine?
Consider the facts that when your followers were in their teens, as they're undoubtedly now only 20 years old, most of them, that I was following this company back in 2012. And I had bought shares initially in 2017. And I put literally all my money into the company in 2019.
That was back then. He was a bull in 2019. But today, the question is in present tense: is Machine a bull or a bear? Don't be swayed by his blue eyes and blonde hair and washboard abs. None of that matters. The fact is he a bull or a bear at the top of our screens?
Well,
Yeah,
all
I'm
those things
reminding
are
of the
true.
story of Catherine the Great. You know that story, Machine? You
No,
just have
tell
to
me.
do it once to be known as that forever. So, it
Oh
doesn't matter if you
yeah.
were a bull for so long. But, anyway, I'm just going to leave it there because I don't want
All right.
everyone to be demonetized.
Thank you, Alex. We have Ken in the reply saying Machine is a bear, but his mom is a fox. Habib?
My analysis on Machine is the same how Elon claims that he's centric and everything has shifted. That's how Machine is. He's a bull, but everyone has shifted so far that he appears now as a bear. But he's actually a very logical, thoughtful, and well-grounded bull.
Wow. Habib is coming to your sport, Machine.
Beautifully said.
We have hundreds of people in the space, and let's see what the results come in at the top of our screens. Is Machine a bull or a bear? Magic.
Hey, so I have the Q1 numbers pulled up for energy. So it seems the margins were about 20-25. Does that sound about right?
Michael?
Yep, it's 24.6.
Okay, that's what I have. So let's say that, it doubled, right? So revenue doubled from quarter to quarter. So that means gross profit here last quarter was 400 million. So let's say if the margins stay the same, it's very simple. You just double it, right? So it's about 800 million. So I'm just saying, do you think the stock went up in market cap 300 billion because the company generated an extra 400 million dollars in gross profit with the energy business?
Machine, would you like to earn your bull designation?
I kind of was only partially paying attention. You're saying, what do I think? Do people think the stock went up that much because of this marginal energy contribution?
All right.
Boost?
This is what this is what I'm saying. He's a bear. He just can't even utter a bull argument. I'll do it for him. Magic. In your argument, you're assuming a gross margin that is flat quarter over quarter. I believe that's going to prove comically false.
Okay, so let's double the gross margin, right? Let's say it's 50%. Okay. Now, where does that take us? So that's at $1.6 billion. Okay. Or whatever. I think $800 billion. No, it's all that. Let's say 1.6. It's 1.6. So $1.6 billion, and the company's market cap went up 300 billion. I mean, I don't. It doesn't make a lot of sense to me.
Well, it depends on how durable that increase in gross margin is. But Machine?
Well, of course, Magic does make some fair points that I don't know how anyone can consider the rise in market cap to be solely attributed to a beat in deliveries and a beat in energy. They don't mathematically add up. And if you go look at macro, specifically EV stocks, a lot of them also went up, not as much as Tesla. And I don't ascribe it to what Omar likes to ascribe it to, just the Tesla wave, that they're just picking up what Tesla got. No, there's people pumping money into EV stocks, and that just kind of shows you the volatility and cyclical nature of markets. We don't know exactly why all this money was pumped into Lucid. Rivian, you can kind of rationalize. Lucid, well, congrats, you got some stamping machines. I guess we should give you a few more $1 billion in valuation. Whatever the reason is, part of that went to Tesla. And at some point, some of that's going to get pulled out, and Tesla will correct a bit. And we're just going to be talking about it at $200. Again, wondering, why did it go down? Why did it lose $200 billion in value for nothing? Because Elon tweeted something. And it's not going to make sense either. So we just have to accept there's volatility in the short term.
Machine, do you really think Tesla Energy gross margin will be 50% in Q2?
I mean, I'm just going by math here. If indeed, I don't see that they suddenly recognized double the actual installations, like they actually delivered, that many more mega packs in this quarter. I believe a lot of these were partial installations that were already physically delivered in previous quarters and just weren't getting the full revenue recognition. And it just happens that in this quarter, a lot of those installations were finished and getting more of this revenue in this quarter by chance. And that additional revenue, as what Michael and Larry had been saying, is that a lot of those might be very high margin, no added cost. If that's the case, then just mathematically, you're talking 3 to 4 gigawatt hours worth of revenue that would mostly be very high margin, like 80-90%. And so just balancing it out, that would get you to gross margins for the quarter near 50%.
Okay, so you actually think it's going to be 50%. Before I go to Michael, did you buy call options?
No, I don't know what to do, to be honest.
So you're still not in the stock.
I just have my old shares right now. That's it.
Okay, Michael?
So there's just no way that the energy storage margins are going to be 50% in the next quarter. First of all, the energy generation and storage line includes solar, and solar hasn't been doing so well. Second of all, they do not have that amount of performance obligations that they expect to recognize imminently. So in the 10Q, they tell you how many billions of dollars they have set aside due to performance obligations for energy generation and storage. And it's approximately 3.86 billion for a length of more than 1 year. And of that amount, original expected length of more than 1 year. Of that amount, they expect to recognize 1 billion over the next 12 months. So even if you say that they take their $1.6 billion revenue from last quarter, even if you say they double the revenue this quarter, which I don't think, I think it will be a little bit less, but okay, say you double it, and then take the 25% gross margin, it'll probably be a little bit higher, but just for simplified math, that takes you to 800 million gross profit in energy generation and storage. And again, we're ignoring solar, pretending it's all storage. And then you'd have to add that even if they recognize all 1 billion, then it would be like just barely above 55%. Just barely above 50%. But they're not going to recognize all 1 billion all at once. That's their 12-month total. So there's no way it's going to be 50%.
Let's go to Grant and then Machine.
I agree with all of the math that Michael just walked through. I want to commend him on his critical thinking skills. He's 99th percentile of all the bulls I've ever met.
Machine.
Yeah, I was gonna say that's good analysis by Michael. He knows more about this than I do in terms of what they're saying in the 10Q. So if that's the case, it doesn't sound like the performance revenue part of it is as big as we're thinking on a percentage basis, and that somehow indeed they just recognized more of the physical installation or deliveries in this quarter. I still think that means then that there's not going to be an overreaction to the earnings report if it's because there's not going to be some super high number, and then either in Q3 at some time or after Q3 earnings report, depending on what they state, they're going to have to state basically that the energy deliveries is going to go back down because they are not at a 10 gigawatt hour run rate. So these things are lumpy, as they always say, and we just got a big lump up, and probably then it's going to have to go back down for a quarter or two. And I don't know how the market's going to react to that. If they overreacted to a very positive quarter, then are they going to correct themselves when the next quarter is expected to be lower?
Yeah, before I get Michael's response to that, I'm looking at some of the replies to the tweet at the top. People are undecided. Ellie says bullish bear. Someone in YouTube live chat said machine is an unbearable. Scott says no blue check mark for a reason, pure spam. Jennifer says he's a bell amusing darling. Lance says bear. AJ says clearly a bear. Henry says his mom is a bear. She bears it all. I encourage Machine's mom jokes in the reply. Michael.
I'm just curious where Machine is getting the idea that they're not anywhere near 9 gigawatt hours production. I'm just curious because the Lathrop Megafactory has a 40 gigawatt hour per year like capacity, and so I'm just curious where he's getting it from.
From all the analysis from people like Bradford, who actually went to go study and tracking, was that, and stated by Elon and Drew, was that they only had one lineup running, and that was through the beginning of this year. So it's arguable, it's possible in the last quarter or so that they've installed the second line without telling anyone. And even if that's the case, though, the production of those packs and the delivery is something I don't think syncs up with having it already be delivered and recognized in Q2. That's simply too early. There's too much of a latency. So that's where I don't think it's possible. And lastly, I would just say of all these comments, clearly the one that is very correct is Habib, with the blue eyes, long blonde hair, washboard abs. Absolutely. I mean, that's the things we need to focus on, not if I'm a bear or bull.
All right. Okay, I want to ask you another question, Machine. So yesterday, there's a lot of news and speculation and rumors about Tesla dry cathode for the cathode. And in the purple pill, Tesla stamp posted Jordan's post on this. Tesla is about to solve the dry coated cathode, whereas Electrek published something else, the opposite. What is your take on it?
Coincidentally, I just have that tweet up from Kelvin Yang going into depth about this, and so I have not fully read on this yet, so I can't really comment because I have to finish reading this description, and then I haven't heard anything from Electrek since I don't really go listen to that website, so I'll have to come back.
Michael, what do you think?
I also haven't had time to read through it. I have it bookmarked. But I'll just say to our previous topic from the Q1 quarterly earnings letter, quote, our second General Assembly line, this is for energy generation storage, quote, our second General Assembly line is now commissioned and we continue to ramp our 40 gigawatt hour mega factory in Lathrop, California toward full capacity. Just a response to you, Machine, from the second General Assembly line.
Machine, the post from Calvin Yang, have you ever heard of that source, the publication or the author?
I mean, all these Mantner names sound the same to me.
So I'll take that as a no. Michael, have you ever heard of that publication before?
What was the publication? I don't have the post in front of me.
I'm not sure. Has anyone heard of the publication? It's at the top of the post. I've never heard of it. I've never heard of it. And if you read the full thing, it doesn't appear to be as positive as people are making it out to be in the replies. Especially the sentence that kind of stood out to me is, after Drew Baglino left, Tesla reached a breakthrough. I'm like, really? Like, really? The guy who ran it for 10 years, when he leaves, all of a sudden they achieve a breakthrough? What do you think, Michael?
I'm just thinking, what wasn't there also a rumor that Elon's going to shut down the 4680 project
Well,
by
that's
the
what
end of the
electric.
year if
Electric.
nothing?
So the electric report said something like, Elon gave them a ultimatum, basically, and said a deadline, let's call it. And if you can't figure this out by the end of the year, we're going to move on, kind of thing. Machine, and then no more.
I just love how they put in that Zach Kirkhorn was pissed at Blagulino that his department
also
was
left.
always the one with the highest COGS, which we knew, right? That was the thing. It was massive cash burn from this project, screwing over margins, screwing over people like me who made dumb bets that the stock wouldn't go down too low by January 2023. And Drew screwed me over personally. Thanks a lot, Drew.
Well, what do you think about this report that 4680 Elon is ready to pull the plug if they can't figure it out by year end? And also the rumor from Calvin Yang that they figured it out. They had a breakthrough on the cathode side.
Well, I'm not sure what it even means to pull the plug on 4680 at this point. They have the 4680 structural pack shipping in Cybertruck. They have suppliers making 4680 cells. The structural pack architecture isn't going away. They're continuing to ramp up their own production. I've got my own first 4680 vehicle, and it's pretty great. There's no, downside to having a 4680 cell. It's all upsides in terms of the vehicle dynamics, the structural pack, the cost for Tesla, which enables more range, all of that. So I don't see them abandoning the 4680. A lot of people misunderstand the purpose of 4680. They think it's supposed to be representing the majority of their volume or something, and um, they're not going to use any other cell suppliers. They've been saying since the beginning we're going to use other cell suppliers, but we're also going to do this. And I think it's a really important project for them long term. If it's true that they have figured out how to get the dry coating working for both the anode and the cathode, that's going to be another major leap forward. The promise of this technology, as they do get it to ramp, is that you can build a new cell production line for a fraction of the cost, a fraction of the space, and a fraction of the capex of a traditional line. So it's still relatively low volume. The Cybertruck's only doing a few thousand units a quarter, but I think it's an important thing to continue to work on long term. You look at the success BYD has had as a company that started out making batteries for phones and how successful they've been in EVs. I think vertical integration down to that level, even if CATL is their majority supplier, but actually producing cells in-house, understanding and owning the entire sort of EV value chain from top to bottom, I do think cells are an important part of that. And I don't expect it to be like, overnight, most of their cars are using 4680s, but I think they'll continue to invest in it.
Machine, what do you think about all that?
Good job,
I mean, so Electric Report said, let me just read this real quick. By the way, Electric is reporting the information. Okay. So the information report says in May, Musk told the team working on the 4680, the nickname for the cylindrical battery, which is 46 millimeters in diameter, 80 millimeters tall, to cut its cost and scale up one of its key innovations by the end of the year, according to 3 people with knowledge of the matter. And in recent months, Musk has told them he wants to see a solution to a thorny technical problem that can cause the batteries to collapse on themselves while in use, one of the people said. And let's say pulling the plug in the sense that maybe scaling back resources. I believe when they first announced their plans on 4680 on Battery Day in the third quarter of 2020, they had said 100 gigawatt hours in 2022. And today they're producing about 1,000 a week. So let's say times 50,000. And Michael, what's the capacity of each Cybertruck battery?
I think it's 123 kilowatt hours.
Okay, so we're looking at 6 gigawatt hours, right? That's the current run rate right now. So 6 versus 100, 2 years later than planned.
Right, but at the same time, of course, there was a global supply chain disruption. Commodity prices shot up during this time. I mean, making cells is extremely challenging. There's entire businesses, entire billion-dollar businesses that are just dedicated to making cells. I think when you just look at the bill of materials of an EV, right? So look at the EV and say, what is the cogs on this thing? A huge part of it is the battery. So even just starting at a small scale to make their own cells, it's going to yield long-term benefits. I'm pretty sure of it. You're already seeing them say that this year they're going to be doing better than their other nickel-based suppliers. So still more expensive than LFP, but cheaper than what Panasonic and LG are offering them. That's a competitive advantage others don't have that's going to allow them to offer more range for a lower price.
All right. Michael, any other thoughts on the matter? Tesla Energy. And then I'm going to get Omar's answers to the questions at the top. Michael?
Nothing on 4680, but on energy, then we did get guidance on either the Q1 or the Q4 call that 2024 energy deployments will be 75% higher than 2023, and 2023 was 14.7 gigawatt hours. So that implies that the remaining 2 quarters will average around 6 gigawatt hours. So higher than it was in Q1, but lower than it was in Q2, which kind of reflects the lumpiness of the energy storage business that has previously been described.
Thank you, Michael. So Omar, before you joined, we talked about the questions at the top. One of them is, will Tesla deliver more cars in 2024 versus 2023? People were divided on that between bulls and bears. What do you think? Are you still sticking with slight increase versus 2023?
You know, it's looking like they're going to be down slightly year over year from what I can see, but it's possible they could have some really good quarters and actually be slightly up. But you just start to do the math on the quarters they have and what they need to beat last year's number, and it seems like they'll probably come in, maybe 1.7, 1.8, somewhere around there. But yeah, I think probably once rates start coming down, you'll see growth increase, but that's not going to happen really until Q4 at the earliest.
Yeah. Yeah, and in my opinion, I think the rates have to come down quite a lot for it to matter to deliveries. A 25 basis point cut, I don't think is going to be enough. So, and I think it'll be sometime after the rates come up. Like, for example, on the macro front, this morning we got the news that initial weekly claims jumped. Initial weekly claims for unemployment benefits, which is supposed to be I guess a leading indicator of unemployment rate, jumped today. 243,000 people applied for unemployment benefits in the last week. Okay, so this is the week that ended July 13, and continuing claims, so people getting unemployment benefits, increased to 1.867 million, and that is for the week prior. So continuing claims lags initial weekly claims by 1 week. And this is still not recessionary levels. 243,000 a week is still not recession levels. I think that is more around 300,000, 400,000, 500,000 levels. But there is a theory out there that once this thing gets going, it accelerates. And it's been moving higher pretty much week after week. with maybe a pause, but the 4-week average of initial weekly claims has been moving higher. And I believe that after this data point, we're going to start seeing Fed officials maybe scale back a little bit on their, maybe they'll become a bit more dovish on general. This is a topic I follow on the macro analyst, who is the co-host on that account. If you want more macro news, macro analysis, follow that account, the co-host macro analyst. Omar, after today's initial weekly claims, how are you thinking about the potential start to a recession by the end of the year?
I mean, I think the consumer has been challenged for quite some time. I think you're starting to see sort of a lot of the leash run out in terms of consumers' debt level, their ability to spend, seeing the labor market start to soften. So things don't seem to be that great economically, but we have so much room for monetary stimulus that I don't see it really becoming a severe or prolonged recession. I think we need to see some softness in the labor market, in the economy, to really justify a cut starting to happen. So, in a sense, it is the softening that we're looking for in the economy. But as we come into this environment where rates start to be cut, it may be an environment where unemployment is slightly higher than it has been in the past years, and consumers' willingness to spend and consumer sentiment is maybe a little bit lower than we'd like.
Does that lead you to adjust your estimate of fair value for Tesla, $1 trillion today?
No.
Okay. All right. So the question I asked earlier was, will Tesla deliver more cars in 2024 versus 2023? You said somewhere between 1.7 million to 1.8 million, which would be a slight decrease of deliveries. Okay. And do you have an estimate for Tesla energy gross margin, which is the second question at the top? We have a wide range of estimates for Tesla energy gross margin in Q2. And I remind people that this is very material for Tesla's both intrinsic value and also stock price action for the rest of the year. This figure is going to be very material for Tesla investors in Q2, Q3, Q4. The days of Tesla Energy being immaterial is past us. That was in previous years. This year, Tesla Energy is very material to Tesla investors. So this is a very important topic that generally people dismiss. I encourage everyone to put their reply at the top. Take a shot, take a guess, make it your starting point, and then as new information comes in, we can work with that. But take a shot at it. Nobody's going to block you. Nobody's going to diss you for getting it wrong in the replies. Omar, what do you think?
Well, this isn't the most informed guess. I haven't done a ton of research into what the margins might look like and what the margins are of peers. But given that they're higher than the auto business, and they've said that, I would expect that energy gross margins are probably somewhere around 20% to 25%.
Michael, would you like to give us your couple sentence summary again of how you think about Tesla energy margins?
Yeah, sure. So I think of Tesla energy margins as basically one, they're ramping up production, and as you ramp production, you get cost efficiencies as the fixed costs get absorbed over a larger amount of gigawatt hours deployed. Two, there's a decrease in the commodities, lithium carbonate, for example, and so that corresponds to decrease in the costs. Tesla has also been cutting prices, but they've had such a long backlog that I don't think they were cutting prices in excess of their COGS coming down. So those two factors are expanding margins, and then the third factor is the performance obligations that basically allow them to recognize revenue on storage assets that have already been installed and all the costs have already been recognized before. So it's basically pure margin that they would be recognizing. And I agree with Tesla Larry on this. He did some great work analyzing this, and I was skeptical at first, but I looked into it and I think he might be right.
Michael, after you looked into what Tesla Larry said, Larry Goldberg, who, by the way, is from South America. I mean, oh my gosh, South Africa. And the reason I'm bringing it up is because every single episode people think is from like Australia, New Zealand. I think someone said yesterday, I think I heard Argentina. No, Larry Goldberg is from South Africa, people. And so, Michael, after you looked into it, are you adjusting your positions in Tesla stock? I know you have a core position and you make some trades around the edges with options. Are you taking a position for Q2 results?
Not at this time. While I'm bullish on energy margins, I'm kind of urging caution on auto margins, but I think there's a lot of uncertainty because we really don't know how the financing deals are accounted for and how much of an impact they will have. I submitted a question in the say queue, but it took forever to get approved. So I don't think it's going to get asked about the financing. But I hope that they will give some detail on how they account for that. But I think a lot of the forecasts I've seen from Tesla bulls for the Q2 earnings were quite bullish on auto margins despite the financing deals. And if you look closely and try to figure out whether they accounted for the financing deals, a couple of them I've seen that they actually didn't at all. So I think that's a blind spot for bulls. I'm highlighting it and urging caution. However, on the other side, the sell side analysts haven't updated their estimates much, even after the production and deliveries beat, and it's about the same. So sell side analyst estimates are probably too low. Bulls estimates are probably too high, given that auto business is still the largest part. And then who knows what the actual market, what the buy side analysts and the actual market believes. That's kind of unknown.
Okay. James Catt also mentioned in the replies. So I read all the replies and I look at the discussions, and James Catt tuned in and said he expects Tesla auto margins to be down in Q2 from Q1. We have Magic in the audience. If he wants to come up to speaker board, maybe we can talk about the financing accounting. Michael, according to James Catt, he believes Tesla will pay Tesla's basically buying down the rate and making a one-time payment to the financier. Is that your understanding as well?
Yeah, that's probably how they're doing it, because what I've heard is that when people have those financing deals, like the bank name on the loan document, there's a bank name and it's not Tesla. So I don't think Tesla is financing it themselves, probably, in which case they would have to buy down the rate.
Okay. And do you believe, so Magic thinks that the margins will take a big hit. James Catt believes the automotive margins will be down slightly quarter over quarter. But I think both of those parties are missing the fact that in Q1, Tesla had massive incentives to push the cars. Massive. I mean, we're talking very varied on the new inventory page, deep discounts, 10,000, 15,000 free supercharging miles, and many other incentives. Whereas in Q2, the financing offers, the subvented loan rate offers, were narrower in scope, I believe. What do you think about that? And then we're going to go to Magic.
I'm not sure if they're narrower in scope necessarily. I do agree with you though that generally that will offset each other. So they didn't do as much inventory discounting this quarter. They did do more subvented loans, but it was in the two largest markets, Model Y in the US for May, and it was probably the vast majority of Model Y sales in Q2 in US that had the financing deal.
Can you help me understand why you think so? That is vast majority of Model Y sales in US.
Okay, maybe not vast, maybe that's a little bit overstated, but I think at least a majority of the sales were during the financing deal period, but also not everyone qualified. I think they were looking for certain credit scores, but that might have driven incremental interest in sales anyway, even if you didn't qualify for the full rate buy down. So I do think, and then in China, I think it was the whole quarter, 0% interest rate for 3 and Y. And that's their second largest market. And these buy downs are really expensive, like to the tune of $8,000 plus per car. So that would qualify. But I agree that the offsetting factor is, yeah, there was a lot of inventory discounting in Q1. I think I'm more closely aligned with James Cat on where the auto margins will end up. And the other part to consider is that there's a lot of positives for auto margins as well. COGS have been coming down, the input costs have been coming down, lithium carbonate prices have been coming down, and Cybertruck was a higher percentage of the deliveries, and it's like $105,000 plus ASP probably. So that's going to be a tailwind for the margin. So I think the truth is never black and white.
Well, I don't know about Cybertruck being a tailwind to the margin in Q2, just because it's the production levels are still very low compared to the
Cybertruck's a
nameplate.
headwind.
Exactly, Cybertruck is a headwind to margins even in Q2.
Incremental tailwind from Q1.
I still don't know.
No, because they barely made any in Q1.
Right. Okay, before we go to Magic, so we're going to get to Magic, then Henry, and now we're going to talk some FSD with Omar in the last 15 minutes or so. But before that, it is very important for listeners to reply to the tweets at the top. This drives engagement, which informs the discussions in this space, and it also supports the space with ad revenue share. This is very important. I understand not everyone can sign up for Patreon, which is still the best way to support the space. But if you can't sign up for Patreon, please engage with the tweets, the questions I ask. Thank you. And special shout out to Omar and Habib for being a long time great supporters of the space on Patreon. Okay, Magic, then Henry.
Okay, so I agree. We don't know how many of the vehicles that were sold in Q2 took the financing deal. I think I want to pose a question. If you're going to buy a car and they're offering you 0% financing, wouldn't you take it? I think even if I was preparing to pay cash, if they're offering me 0% financing, I'm going to take it. So I think the volume of the deliveries that are 0% financing, I think it's higher than people here expecting. If they're just giving you that incentive, they're going to take it. So anybody that does take it, that's going to affect margins. So I think it might be higher. I mean, logically,
you're assuming they qualify for the credit score requirement.
Again, yeah, we don't know what the credit score requirement is, but assuming that you do, wouldn't you take it?
Of course, Henry.
Yeah, Yaman, we were having a little bit of a tweet discussion on this prior to Trump getting shot. Where do you stand on them being able to amortize the cost associated with buying down the interest rate? Because I'm in the opinion that you could amortize it.
Yeah, I think just the revenue expense matching principle of GAAP requires that if you're going to recognize the revenue, you have to recognize the expense. So I think it's going to be, basically a one-time payment to the financier, the lender from Tesla, and a one-time expense. So essentially, Tesla shifted the expense from a discount on the new inventory page to just another line item on the income statement. Go ahead, Henry.
Yeah, but if you incur incremental costs in order to make a sale, you are allowed to amortize that expense. It's not just financing costs. It would be all types of costs like commissions and stuff like that. You don't even have to hold a loan on your books to be able to amortize it. And this is in line with the ASCII 606, I believe. I'm not at home, so I can't bring up all the things that I was looking at already, but I'm pretty sure you'll be able to capitalize this expense.
Yeah, there's also the fact that this is a financing treatment. The fact is, it's really the economics of the deal that matters more than the actual accounting. So people sometimes focus way too much on how things are accounted for. In a discounted cash flow analysis, all of that kind of washes out. And the fact is, Tesla had to offer these low rate financing to move the cars. And that's what matters from an intrinsic value, discounted cash flow analysis, valuation analysis. So this is kind of besides the point anyway. Okay. Let's go to FSD for the next 15 minutes or so. Omar, how is your car doing? How is FSD 12.4 doing for you? Elon replied to I believe a Chuck Cook post and said 12.5 they're testing is going to bring FSD to Cybertruck and also merge highway and city software stacks. What are your thoughts around that?
Yeah, FSD 12.4 is looking pretty great. It's just very smooth and human-like. I was out for a drive yesterday. I went to go take a walk and went and drove my car manually there and drove back on FSD. And I mean, it's just amazing how effortless it is. You don't have to think about it anymore. So it's already getting really good. It's disappointing to see that they haven't rolled it out to more people. I think they're just being super cautious with the new driver monitoring system. But hopefully we see that change very soon, whether it's a 12.4.4 or maybe 12.5 or something like that. But yeah, I remember we were talking on the space the other day. Cybertruck support's still coming. So to get Elon confirming this morning that 12.5 is going to support the Cybertruck is super exciting. I mean, the Cybertruck is such a great vehicle to drive already. With FSD, it's just going to be killer. So I'm really excited to start testing that out. And bringing the end-to-end driving to the highways is also really significant. If you've noticed, even just on this space, when people come and complain, more than 50% of their complaints are about the highway side. And I usually end up saying, well, they haven't moved highway over to the end-to-end stack yet. So now they're going to be doing end-to-end driving on highways as well. So you would expect to see a significant improvement in highway driving of the same kind that we saw on city streets. And at that point, I think it's time to start trying coast to coast drives because it's really only a matter of time before thousands of miles between intervention is routine and you can cross the country without an intervention hands free, no problem. So I'm not sure when they're actually going to release this, but hopefully it's soon because I think this is going to be a pretty exciting release.
Henry.
Yeah, Yaman, I know you wanted to move past the topic. Can I say one more thing regarding what we were talking about?
Sure.
Thank you. So there is two components to that, right? So, right, it is the fee that they're gonna have to pay to buy down the interest rate at origination date, at the loan origination date, and then subsequent to that, until the loan terminates, someone's gonna have the interest rate risk beyond that date. That is likely going to be negotiated by Tesla so that they take the interest rate risk. And if rates drop from this point on, they're going to have an upside from a fair market value adjustment that they would have every for the duration of those loans. So they could have an offset to those losses. They could recover some of those fees if interest rates start dropping. And we're expecting them to start dropping in September. That's why I think it's like the timing of this is very interesting.
Well,
I feel like
you're speculating, right? You're speculating that Tesla will work that clause into their agreement with the financier, right, Henry?
I've seen in the past. Yeah, can you hear me?
Yeah, you kind of dropped off there, but
Sorry. Yeah,
you're speculating, right, Henry? You're speculating that Tesla will have some sort of a negotiated clause in there with the lender.
I worked with a financial services company in the past where we handled deals that were sort of like this, not automotive, but usually that risk is passed on to the sponsor here, which would be Tesla.
Okay, so in that case, if the risk is with the sponsor, then they would benefit from declining rates, right?
Tesla would, yeah. So that's why.
I'm sorry, we're moving on. You're speculating, but if you want to create a thread that details out your position, I'm happy to discuss it tomorrow.
Okay.
Thank you.
One more. Can I say one more thing? Sorry. No. Okay.
Omar.
Yeah, this has obviously been a subject of a lot of discussion. It could be a positive or a negative surprise on the earnings next week. It's a little unprecedented, so we'll kind of have to see. But really, structurally, it's the same thing as any kind of discount, right? Whether you're discounting the inventory or discounting the interest rate, it's a sales incentive. But this was a little bit more targeted than the inventory incentives. So, how much of the volume in the quarter was affected is a little bit of an open question. And I think we'll see. I think it has kind of an equal chance of being better or worse than consensus expectations, depending on how the details of how they arrange this. One thing that I would try to do if I were Tesla is say, hey, if you can absorb some of the cost of this subvented loan rate, we'll make you the preferred originator for Tesla loans. As we go through the website, we'll sort of direct more loans your way when people buy through the Tesla app, and maybe make some deal like that. So again, speculation there, but we'll see how they actually arranged it and what the economics actually look like this quarter.
Yeah. Yeah, I mean, any upside surprise is going to be from Tesla Energy. Gross margin of Tesla Energy, very material topic. And also the durability of that gross margin is very material. I repeat, very material to Q2, Q3, Q4, 2025, and intrinsic value of Tesla today. And this is something that people are not paying enough attention to. I highly encourage the listeners to reply to the question at the top. What was Tesla Energy gross margin in Q2? Even if you haven't done the work, it's fine. Make a reply, and we'll talk about these estimates after the Q2 results are announced. Omar?
Yeah, the way I think about the Tesla Energy business right now is we're kind of like at the phase where Fremont has become profitable and they're now starting to build Shanghai. And they've been building Shanghai for some time. I think it's supposed to actually get up and running and producing megapacks in 2025. But not only are you going to have a superior margin profile in Shanghai, not only do you have a far more advanced battery supply chain in terms of, the cell content of those megapacks, not only do you have the ability to ship to many more markets compared to the United States, it's essentially there's similarities really between the opening of the Shanghai car factory and this. It's going to have a superior margin profile, and probably, I believe, at volume, account for more than 50% of the production volume of megapacks globally. So really the economics we see in the second quarter are only going to benefit from increased scale and from the opening of the second location, which will at least double production capacity that's installed.
Thank you. Trevor?
Yeah, I just wanted to offer going back to the FSD topic, if it's okay. I wanted to offer a counter
Please.
experience to, I know Omar has a really positive experience, but that's not the case for everyone. And, for me, it's basically unusable in Seattle. And I just want to put that forward because I feel that we hear a lot
Can you be more
from.
specific? Can you be more specific about why it's unusable for you in Seattle?
Yeah,
because I've talked to people in Seattle who use it, like
Yeah,
Gally,
same.
for example.
Yeah.
So what makes it unusable for you?
I can't really get even out of my neighborhood without disengaging. There's certain areas of Seattle that have very narrow roads. We're hilly. We have a lot of vegetation. It's difficult to see, and this is also a very, very cautious build. I've seen most people speak about the cautiousness of it. Either it won't advance or it goes too slow or it just flat out stops either in intersections or on narrow roads. It's tried to pass traffic, in an alternate lane when, with an abrupt wheel turn, when really you should stay put and just wait for the stop and go traffic to continue. That's more forgivable, but generally, I just I can't turn it on without getting in a fight with my wife right now, if that puts it into perspective.
So you can't get out of your neighborhood because it's driving too slow, and your wife is getting upset about that?
Well, most of the time I don't use it with her in the car now, but no, it'll just stop in the road, and I have to give it an accelerator press, or I'm just basically stuck.
Well, yeah, I mean, sometimes you do have to give it accelerator presses. When I started testing it, it was like driving into other cars. So, I mean, even what you're describing sounds like a pretty big improvement. If you remember when Gally started testing it, it was like driving into the monorail tracks, right? So, I mean, new versions are usually a little more cautious at first, but as they get validated, they start driving more confidently. And I'm starting to see that happen now with the latest build. I don't know if you're running 12.4. Sounds like you are.
Yeah, 12.4.3. 12.3, worked pretty well. It had hiccups, but 12.4.3 is a little bit rough for me, and I can't justify paying for it at this point, given that I'm basically paying to train the model now and give input on my disengagements.
Well, I mean, if you don't want to pay for it, then don't pay for it. You can drive yourself. But it sounds like what you're describing is just a little bit of the cautiousness with the new version. When you put a new model out and you don't know about some of these bugs and failure cases, you just have to be a little more cautious until you get some validation data back. And I was seeing the exact same thing you were seeing, and I was complaining about it very loudly on X that it was too slow, it was too cautious, it was slamming the brakes on yellow lights, and then it just started driving like a human again.
Well,
So
this is something I wanted to raise actually because I think people have said, "Oh, give it a week, it'll get better." And one, I don't understand how that works on a technical level. But two, it's like, should I expect to pay $99 and have the first week or two be terrible? As a customer, it's not a good experience, and I don't think it's
Well, don't pay
helping
that.
us
Then
out.
why are you paying for it?
yeah, I mean, you don't have to pay if you don't think it's worth it.
Well,
But
I'm
there
a
are a lot of
stockholder, so I want
people.
to
I mean,
track
there are
the
a lot of
progress of this
people who
technology.
there are a lot of people who are dying to try the hands-free FSD. So a certain number of customers, right? 90% of the customers don't have it. A certain number of customers got selected to try it early, and that sometimes you have to deal with extra cautiousness. If you don't want to be one of the first customers to try it out, then just simply don't install the update until
No, I
maybe a few
do,
weeks
but
later.
I do question when I see things like 5 to 10x improvement promised, and I actually see a major regression, whether we're on track towards robotaxi level performance.
What
Okay.
you're describing doesn't really sound like a regression to me. It sounds like you're just seeing the cautiousness of the version. So, the neural net outputs have a confidence, right? So they say, hey, okay, we need to go here. Confidence 75%, confidence 90%, confidence 80%. So in the early days of the build, they say, okay, the confidence level needs to be at, let's say, 90% for you to proceed. So you see a lot more slowness, a lot of waiting, a lot of stopping, because even if it has 85% confidence, it doesn't go. Then they start getting data back. They say, okay, we've resolved most of these issues. We can now go on, let's say, 80% confidence or something like that. And then you start to see more natural driving behavior. So, yeah, I mean, I think you're probably going to be pretty impressed with what this version does as you continue to drive it. For me, it's been driving hours through Los Angeles and San Francisco, narrow streets, hills, areas you can't see, fog, you name it. And what you've described to me just sounds like the typical cautiousness of a new build rather than, something that's, I think, specific to Seattle.
Okay. I'm going to ask Trevor to come and update us once he gets 12.4.4 or some other version. I would like to hear his updated experience with FSD later. We have 2 more hands and a few minutes to go. Let's start with Jimmy and then fix it.
Yeah, I had one for Omar here. So I watch packets on my network, what are getting transmitted to and from Tesla. The question that I have for you is the car learning without receiving an update? And my example here is when I drive my car home, it would just pull over to the front of my house because that's my house number. It faces that road. But my garage is on the right side on a different street. And so, what I've been doing over time is I just accelerate manually and I put my blinker on. And ever since I've been doing that, the car now just does it naturally itself. And I never submitted a report, I didn't do anything, but it seems like it's learning my habits. Is there any technical thing in the background of that that's going on?
Yeah, I mean, it's hard for me to really understand what you're describing. So you're saying it just started pulling into your garage after you indicated it to do so?
I'm going east to west. That's the way my house faces. My house is north facing. The street in front of me is east to west. My garage, though, is north to south. And so it just used to pull in front of my house and stop. But then I would just give it a slight acceleration and I would manually turn the blinker on. And I did this repeatedly over like a couple of weeks. And now it will just naturally do it. When I hit the home button, it goes in front of my house and it naturally just cruises by it, puts its blinker on, and then makes the turn into the side street where my driveway actually is.
That's interesting. I've never heard of anything like that. But I would just suggest to people to set their home pin where their garage is. I mean, the car doesn't like learn anything on its own on the car, right? You have to sort of send the data back and wait for it to retrain. But there are some things that can change without a full model update. Like I said, for example, configuration changes, confidence changes, other just sort of fine tuning of the model and the weights they can do. So sometimes things do seem to get better between updates, but it's really when you download a new version of the model that you can get major new functionality. But not all of it's unlocked right away. Like I noticed, for example, in 12.4.3, it started pulling into driveways not when I first got the update, but when, a couple weeks later. So it could be that, in some cases they have some certain functionality that they validate. And once it's looking good, then they start turning it on. And I've noticed mine has started pulling into driveways more often when it can at a destination.
It, fix it. Go ahead.
Yeah, so to that last speaker about the regression, I've been very critical of 12.36, and I have to tell you, this is not a regression. This is such an improvement, the 12.43. It does have some new issues, though, not bad, but it does have some new issues. But it's definitely not a regression. It's from where I live here in Washington State. It's 10 times better than what I used to have. But I do have a question for you guys. I had an experience yesterday, which I'm uploading today. I was driving on the same road, and this is just something that to the last caller I want to understand. I was driving on the same road and been on this thing 12.34, 12.36. All of a sudden, it swerves into oncoming traffic, and then it corrects itself. So one, why did that happen after being on that same road multiple times? It's never happened before. And then two, is that a critical disengagement? Would you guys consider that critical, or because it corrected itself back into the road, or not? Thank you.
Omar?
Yeah, I mean, that's kind of a gray area. If it were able to correct itself and avoid the crash on its own, then technically it's not a critical disengagement because it wouldn't have caused a crash, but it's obviously still an error that you don't want to see the car do. It would probably upset the customer. So, you know, you could call it a critical intervention or a critical error. But, you know, generally, I mean, I think it's also just important to emphasize, and I think a lot of people have a hard time kind of wrapping their heads around this because, you know, we use an iPhone, we use a Mac, and all of us have the same experience, right? It's either a good iPhone or a bad iPhone. But in the real world, when you're talking about real world AI, everybody lives in a different place. Everybody has different experiences. And it's also subjective, right? Sometimes you're in a good mood, sometimes you're in a bad mood. When you're late and, you know, your boss shouted at you or whatever, and FSD is making you get to the meeting late, then you're probably going to have a more negative opinion on it. And, you know, some people just live in neighborhoods that are a lot more challenging. Somebody might live in a neighborhood that's very simple for the software. So everybody's experiences are valid, right? If somebody says, you know, hey, I don't like it, then they don't like it. If they don't want to pay for it, they don't want to pay for it. And if everyone was having a great experience, then we'd have robo taxis. The challenge is really making it work with the same level of performance anywhere in the country and in the world.
Yeah, just take. So the reason I asked about the critical engagement or disengagement is because I'm keeping a log out. I want to for myself see how many miles did I go on FSD without an intervention or disengagement. So if you do get a chance, maybe you can privately DM me. I'll post it up here in a little bit. But just let me know if this is considered critical or not, because like I said, it corrected itself. There's no oncoming traffic coming in, but it did swerve into the oncoming lane. I'm like,
I mean, you can just call it critical.
Yeah.
You know, it's an error. It's a serious error. So
How many
I'd call it
miles do you have
critical.
between disengagements so I not fix it?
let me pull up my spreadsheet. Give me a second. So
Just off the top of your head is fine. Off the top of your head, how many miles?
I had probably about 70 on this one. Before it was 113. Before I had that disengagement, this one's about 70 when this happened yesterday.
Are you contributing to the FSD tracker?
No, I don't know what that is. I just started driving and posting my drives.
Okay. All right, we're going to end it there. Thank you very much, everybody. Please be sure to reply to the questions at the top, and I will talk to you all tomorrow. Thank you very much, and take care.